Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 17th of November 2025. My name is Mark Gardner. Friday night, stocks ended fairly mixed as Nvidia and the payrolls numbers loom large this week. We've got Nvidia coming out Thursday morning, and then we will have US payrolls Thursday night, the 20th. The Bureau of Labour and Statistics announced that would be their main focus, that the employment numbers and the CPI numbers would be prioritised over the rest of the data. So this is going to be the October number. It should have come out. So we're still playing catch up on quite a few of these. We did have there were some dip buys on Friday night, basically in the AI related stocks after a bit of a heavy sell off during the week last week. Our market and the Asian market was pretty dour. We sort of saw a late session recovery in the US. Towards the open, the Nasdaq was down 1.3 odd percent at one stage, but finished just slightly flat. The S&P just below flat as well, 0.05 down. The Dow was down 0.65. The Russell actually made a slight recovery, but was the worst one for the week overall. Realistically, the last 5 days, US stocks have basically have gone nowhere really. We do have this big number coming up, but as you can see, the technicals, the daily in the Aussie is a strong sell. It is same for the Russell. We're neutral now in the US, and we're actually in the S&P 500. We've got a sell. So on the weeklies, we're still a strong buy. We'll see how that rolls over the course of the week. Nvidia being the last of the real big players to report this earnings season. There has been a bit of selling pressure in that stock for quite a while now, but obviously not on Friday night. But for the week, it was down quite a bit, but up to 1.77 in the end. I think we had the financials give away a little bit of ground. JP Morgan, Visa, MasterCard, and American Express all giving away around about 2%. We've got those pretty high credit card debts, and in 90 days in arrear numbers, which the people have been very focused on over the last the course of the last few weeks or last couple of months, just in particular on the back of the fact that we're not getting any economic data. So it's the only way to really see the health of the consumer. So little bit of weakness, but mainly in the high growth names in the healthcare sector like ISRG, and then Pfizer as well. Overall, it's no real clear picture here on the heat map of what's essentially been going on. Just a little bit of a reversal of that definite trend back to over the course of the last week, back to defensive stocks, and a shift out of growth stocks a little bit there. So we've got we've got the commodities here now. We'll just have a quick look here, and might just have to reset that very quickly. And then we'll move on to here. We've got the, as you can see here, Nvidia on Wednesday the 19th. We'll get that in the morning. We won't, on Thursday, we won't get that till, probably till about 8:30 now, where we're, now they've gone off daylight savings and we're on daylight savings. You got Walmart towards the end of the week, and a few of the likes of Home Depot, Lowe's, etc. Some of those big warehouse retailers. We do have FOMC minutes and a few Fed speakers. And look, talking of Fed speakers, there was some more hawkish remarks from several Fed Reserve officials over the course of Friday as well. President Neil Kashkari said he remains unconvinced that they need to ease policy. There's two that I haven't heard of that are not necessarily voting members, but Alberto Morsalem and Beth Hammock warned against cutting rates too soon due to persistent inflation. So the market odds for 25 basis point cut in December are just a little bit below 50% now from 70% last week. So that's obviously why those growth stocks have been hit a little bit. But adding into this now will be this employment number on the night of Thursday the 20th. So we'll get a market reaction on the Friday. So I would imagine the market's going to be pretty much on hold up until that point. We don't have any real. I mean, Nvidia and payrolls are the two biggest things you can really pay attention to be honest, particularly coming out of a government shutdown, and they're both happening within 24 hours of each other. So I would expect that this would be and a G20 meeting at the start of the week here as well. Will just be, I think we'll be fairly quiet leading up to Thursday, I would imagine. And I don't see any real reason why you wouldn't be, as I say, wouldn't be returning to cash a little bit. I mean, the technicals are weakening somewhat. The momentum seems to have gone out of the market a touch. There's concerns around earnings. There's concerns around valuations. And these payrolls numbers, based on the amount of layoffs announced by the S&P 500 companies alone, is probably going to be relatively poor. And I don't imagine that. I don't imagine why they would. Based on all of the loans in arrears, motor vehicle repos, credit cards in arrears, the lack of movement in the housing market, etc., and the consumer numbers, why those numbers would be any good. But we shall see on Thursday. But it's going to be, I would say, it's going to be a pretty rush job, and they may, unless it's significantly one way or the other, there may be cause for the market to say that they want to wait for the next one. It depends on whether it suits their argument or not. Generally, in terms of gold and silver, we were down 2% and 3% on Friday night. Still positive for the week, up 2% and up 5%. Lithium obviously made a massive comeback last week, up 15%. Finished the week up 2% for the day. Uranium was down 1.3, down 6 for the week. Bitcoin down 3, or nearly 4%, down 10 for the week as well. And the rest of the market generally somewhere around flat. We did have a bit of a geopolitical flare up as well over the week. Well, Friday and over the weekend. With a drone strike from the Ukraine on a Russian port into the Black Sea, which is somewhere in the vicinity of 700,000 barrels a day over the last 2 months. So that sent crude up a couple of percent, which I would imagine would be, that'd be relatively positive for oil stocks on the Aussie market today. I would imagine that gold stocks and silver stocks will probably drift off a little bit. We may see a bit of a rebound in tech in the Aussie today, but the SPI was down around about 17 points. It's roughly around flat. Be fairly picky because I think overall what you'd be looking at buying today was just a reversal of the overall trend. So you probably don't want to get trapped buying oil or buying tech stocks just because they've had a one-day bounce in an overall sort of souring momentum. So yeah, I would still be very much on the trimming your portfolio side. I think sometime over the next 6 months we will probably have a bit of a significant pullback, and that will likely be the time to buy. For the next sort of couple of years, really. So high cash balances at the moment, I think, are very much of value. And after such a great year, I mean, there's really no harm in going back to a little bit of cash, taking some profits, and if it does drop, fantastic. You got some money there to deploy, and if it doesn't drop, really no harm, no foul, because we're coming off the back of one of the better 3-year rallies over the last 30 years, definitely in the top couple. So probably expecting too much more upside is getting very greedy, I would imagine. So yeah, that sort of wraps things up for this morning. We did actually have there's a little bit of talk and there's some rumours floating around that the New York Fed had a meeting with Wall Street firms over key lending facilities. This is something to watch out for, and we'll have a look at we'll have a look at those credit spreads and keep a close eye on them. But that was on Saturday around about, around about 2 o'clock our time. Something just to be aware of. It's not necessarily a massive concern because these meetings can sometimes be blown out of proportion and be quite regular between the Fed and the banks. And then basically a single headline will sort of fire things up a little bit. But we'll see how that pans out. But have a great day, and we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.